Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. So once again today we are going to be looking at some of the plays that I've been working through the weeks. So it's a good opportunity for you guys to see the way I think, how I trade these positions, and why I do it in the first place. Alright, so for those of you guys who are new to the channel, you are watching me trade the market with market profile in mind. Right, so all my trades, everything I do is surrounding market profile. Part of my process is building structure. So initially I would use a normal chart to determine trade bias, so I need to build structure, and I show you guys how to do this. Again, I build structure and then I move on to market profile to determine my trades. What does the profile do for me? It gives me a very holistic view of where the market is trading, how it's going to possibly trade in the coming weeks, and I can look at multi-time frames within one viewfinder. So by looking at a weekly profile, I can see the 4-hour rotations. I can see how the days are going to position, because all I need to do is split my profile, and then I can pretty much visualize my rotations. So I can trade within these rotations if I like. So I could become an intraday trader, trade within the rotations, right? And then get out of the market so I can scalp my way here and there where there's strong order flow. If I don't want to do that, I can execute very close to the market. So what do I mean by that? I can look at a longer time frame, and then I can execute within that longer time frame, but very close to the intraday time frame, right? Without actually having to put on a 5-minute chart, without having to do a top-down viewfinder approach. Not only is that time consuming, but most people can't relate to the different time frames. So whilst they might be building a bias and they're looking in another time frame for a dip back into maybe a possible liquidity area, or they're looking for a dip back into an area where they're what we call minus development in market profile. So they're looking for it to play back into like maybe a big bullish candle. So take this for example, open and close, they will look for dips into these spaces, which we call minus development. However, you can't see that, visualize that very well on a candlestick chart because you're just seeing the full body. On a profile, you can actually see where the minus development is, right? And that means that you have a better idea of where the market's going to bounce off. So you look around on the web, you see a lot of people, with huge followings online teaching, about fair value gaps, etc. But really all they're talking about is minus development, which these are ideas born out of market profile from the futures market, right? So they've just been repackaged, not in a bad way. It's just, I guess it's sometimes more understandable for people when it's repackaged. I prefer to teach it raw. So I don't want the repackage, because then you don't understand what's going on. You're looking at a package and something that, it's explaining something that is a little bit complex, but it's explaining it, it's oversimplifying it. That's the word. So we're oversimplifying what we're supposed to be doing, and you're going to find that in the long term, the outcomes still remain the same. Right, so we want to move away from that. Right, so let's sorry for the pep talk, guys. I'm going to dive into the charts. Right, so as we discussed in the prior videos, and if you haven't seen them, just go through the Trader Hub playlist on my channel, and you will be able to see all the videos I've covered following the asset classes that I'm paying the most attention to, that I watch, and I have reasons why I watch those specific asset classes. So defining why I look at the asset classes I look at, the Aussie dollar is a commodity dollar. It does reflect crude oil, the movements in that market. There is a degree of correlation with commodities in general. So the Aussie dollar as a currency gives me a good viewfinder that I can relate to commodity markets. Crude oil, of course, that is a key commodity that I want to pay attention to. The energy market links into the stock market, so any huge declines in the energy will pull down major stocks that are within the index that are energy based stocks, right? So we do have a few of them, so any big movements in oil will play out into equities. Oil is also a risk on asset, so any huge movements in oil will indicate that there's probably capital flow from traditional risk on markets to more extreme risk on markets, right? Normally this plays into narratives like inflation, for example. High inflationary environments tend to mean higher energy prices, and thus you tend to see commodity-based currencies tend to outperform at points, right? At least we see a lot of volatility in them. In an environment of devaluation, that might not necessarily be true. We might see decorrelation between energy-based currencies and energy markets, but nonetheless, there tends to be a correlation. So that's why I look at crude oil. The S&P 500, of course, that's the equity market. That's what we want to pay particular attention to, because then that gives us that idea that where's the US market going as a whole, and this is more of a broader benchmark on things like GDP, recession risk, credit risk, whatever. You could see that all played out in equities. So I want to pay attention to the S&P 500. I do look at individual equities because I sell options as well. So in effect, I sell premium. So for those reasons, I do pay close attention to the individual stocks, but mainly the ones with liquid options. So I wouldn't be buying random options here and there. I have a specific idea that I work with options. I look at gold because obviously it's a metal. It is linked to a lot of economies. It used to be heavily linked to the Swiss economy at one point, but you will see gold as that safe haven asset. So it's a good barometer of inflation as well, because gold is an inflation hedge. People will flow into gold in high inflationary environments, and obviously we're seeing that now. Gold is over 2,000 an ounce. Of course, when we're thinking about long-term macro, that's where the structure building comes in. Then we start to project long-term, and then we try and trade that within the profile. The pound, of course, this is a great alternative to the dollar. Obviously, the UK is the UK is Europe's financial capital, in my opinion, anyway. So the pound is integral, but I tend to find that it tends to be a little bit non-correlated in the currency world, right? Largely because in the dollar index, it doesn't have a lot of a weight there. The dollar index is heavily euro weighted, whilst there is some pound in there, but it's not as weighted. So I tend to find there's a slight non-correlating aspect to it at points, which allows you to kind of get some additional alpha. And obviously when I go through my P&L today, how things are playing out, you would see exactly that, because obviously the pound is the strongest performing asset I have in my portfolio at the moment, and the rest are, well, even though I'm a little bit underweighted on some of them size wise, but again, the rest are just doing what they're doing, more or less, right? So there's a lot of high volatility in the pound. Dollar yen, also quite volatile. I do like it. Again, we know there's for me, the yen is a safe haven currency, so it's a real barometer for the US equity markets as well. Again, because of the BOJ action, we've seen the yen decorrelate slightly from the US equity markets, but again, I like to keep an eye on it, because usually when there's extreme movements in this asset, it tends to reflect bigger problems, and obviously Japan being what it is, it's nice to keep an eye on that. The Canadian, obviously closer to crude oil in my opinion, but again, I like to pay attention to the Canadian. They are a major exporter when it comes to rare earth minerals, etc. So anything big going on in that world would impact the Canadian. And of course, cryptocurrency. We can't forget Bitcoin. I specifically pay attention to Bitcoin. This is not the cycle to pay attention to some of the alternative coins out there, altcoins, just because those tend to occur in a bull cycle, which we're heading into a new one. I think as we approach the halving in 2024, that will become an important thing that I'll be looking at. But for now, of course, Bitcoin is one that I keep an eye on, because when we get Bitcoin, we look for extreme dips, so we won't chase. It's one of the debates I've been having, why I don't have a Bitcoin position now, and even though it looked like a really good idea into this bid stack, I didn't do it. And then of course I've got sterling yen. That for me is just it's a way for me to correlate dollar yen. I want to basically see them doing the same thing. You get a lot more volatility out of sterling yen, so if you can afford the position, then it tends to be a good play. To give you an example, if we click through these back and forth, you can see we had a big drop here in dollar yen. We based out, so if you were a buyer at value low, for example, which would have been a good play, then you look at the same reaction from GBP yen and look at the reversal, right? So much bigger. Even though we have a gap in value here which exposes downside risk, it was still a good play at least midweek. So if you were an intraday trader, this would have been a huge move. Right now we're settling inside value. We don't want to, usually I hate touching them when they're inside value for reasons we will soon discuss. Right, so where do we play? So sorry, I veered off because I wanted to tell you guys how I build this. So you've watched a couple of my videos, and I guess no one's knowing where I'm looking at these specific assets. It just looks like stuff on my screen. Now, I'm a multi-asset guy, so I tend to look at multiple things. Some people, it doesn't work for them. When I got the profile, it works for me. That's the benefit of having it. I can look at multiple markets really quickly and come to a conclusion. Imagine I had to do a top-down view on each market, in each of these markets, beyond building structure, which my structure is all long-term. So I only need to do it once, and I can always reference back to it, so I don't need to build structure twice on any of these assets. So once they're done once, they're done. Right? If something changes, I just need to amend it on the structure, reassess it quickly, and then I'm back to my profile. Right? So I can look at multiple assets because I don't have the same sort of analysis drag that you get when you're trading most things. So here we have Aussie dollar. We're breaking upwards now. I was looking for a dip back. I don't chase. So yes, we're trading the highs, breaking structure, but bear in mind we're now going into a high liquidity zone, so we could easily go into this area. It's a prior week high, trade a little higher, and then sell off. Of course, for me, the top side resistance is value high. We also have an offer stack, so there are a lot of reasons, and obviously if you just overlay that briefly, you can already see that we're taking sellers already off the offer stack, right? So I pay particular attention to those because again, there is a technique to this, and again, I do run a one-on-one tuition for guys who are interested in that. They want to sit with someone closely, look after them. That is something I do. I also have courses that are geared a lot towards market profile, but also options, and I will be developing a lot more teaching programs that are going to expose traders to this way of trading, the way professional traders look at the market. Okay, so again, I'll leave links in the description below for those of you guys who are interested, and check it out. And of course, we have a free Discord, so just pop in, ask questions if you need to. Yeah, always here to help, guys. So I was expecting a dip back. I don't chase. We're trading in an area where it could get a bit stiff. Again, if you chase the balance break here, which a lot of new market profile traders would do, I mean, you see a balance break, it's like, oh, it's like alpha here, we're going to get an extension, and then we get what we call a failure, right? So we break the balance, and then we fill back in a value, and then we do a value trade down, and then we trade the gap, right? So this gap needs to get traded out, right? So there is just no way we're going to sit with a gap in value, whether it's 2 weeks, 3 weeks, we're going to trade back down here. So structurally, the Aussie is bullish, right? For me, it's bullish. So I am looking for a dip back into fill in the gap, trading possibly the bid stack, but I'll be a willing buyer at the gap. Obviously, a lot more in terms of stop losses, stop loss space. The closer we can get to value low, the more we can accommodate this trade. Again, that's what I'm looking for. I'm looking for a dip back, at least to fill the gap, and I can analyze range come that week, right? But for now, we can see clearly this week we're probably going to get balance. We're already Wednesday. We don't know what Thursday or Friday will bring. We could end up trading lower, but I'm not banking on it. With crude oil, I have a position on this already, and the positions, I'm going to beam them onto my screen now, obviously blotting out the things that I don't want you to see. But again, you can see my positions, what they look like. And I always say to traders, guys, you don't have to trade big to make money. I do options in the week, so if I closed out all my trades this from the P&L, I'll have a decent P&L for the week, right? And then I'll also be able to take advantage of, remember, if you look at my positions, some of the oldest positions are from the 1st of May. We're 10 days in. It's still good money. I've already taken 500 off the table for my initial dollar CAD position. So guys who've been looking at prior videos, you'll be able to see that. and then I've added more to it, right? So the S&P 500 has gone on that list, dollar yen has gone on that list. So you can see I'm adding and taking off, right? So I'm adding into position. This is how professional traders trade. You balance the portfolio, right? So if you're trading from good trade locations, you got 3 or 4 trades going, all of them are not going to be wrong, right? As long as you're not taking positions that are highly correlated, right? If you look at all my positions, they're not necessarily the most correlated assets, right? So I'm long cable, for example, right? I'm sorry, I'm contemplating being long the Aussie dollar. These are 2 correlated positions, so I wouldn't be short the Aussie and long cable, right? It's a bit risky, and because then one would just cancel the other out. So I'm bearing these things in mind, right? Some positions I look nice, like gold, but it's trading a value high. So we just pop over to gold. We can see it's already traded a value high, taken in some competitive pricing, P period print, and then it's struggling again. I think we'll trade the P period print back to the upside. Gold is in a bullish structure, but for me, unless I was going to buy it on the open of the week, then, and I was looking for at least a slight dip back, maybe back in a 2K, and then buy it there, and then a push and risk against, you know, the 2-week low, right? That then exposes me to an upside break, retest of the S period high, or break it, and then probably head somewhere in the long term to about 2,400 an ounce. But I would get at least a good 2 to 3 week run. My risk will be really tight. I'll be trading very close to the market. So again, it's inside value, right? Inside value, essentially, we see a lot of volatility when we're inside value. And again, like I said, I have an extensive program on this stuff that will really bring you into understanding some of the things we're talking about. But it's inside value, and it's just, you know, you don't want to get involved. You get whipsawed in these kind of positions, right? So if you're an intraday trader, I'm sure they're getting killed, right? So because again, they want to be long, they can see the appetite to be long from the balance break, but now they're back where they started, right? All within the space of a day. I'm looking at a weekly profile. I'm seeing volatility spanning the week in a day, right? So I know you don't want to be here, right? So there are positions that I don't have, right? Again, because they're going to impact. We're going to see a lot of volatility there. Of course, I'm long on the S&P. So again, structurally, it's bullish. I did say to you guys that if it dips back, I'll buy it. It dips slightly into low liquidity area, and I decided to get involved, right? Because I wasn't going to wait for this to hit the lows, especially driving into a US Open, right? Because usually when the S&P is in a bullish structure, it could just keep breaking, right? So I'm expecting that we get a strong week on the S&P. So it made sense to add it now. And obviously I'm a pushing risk looking at the R and W period prints as where the biggest buyers are stacking, right? Any issues there, it's a thin tail. So if we trade down here, we're going to break it, and then we're going to be 3,990. So we have to keep, this has to be a continuation trade. If it doesn't become that, the only defense is value low, right? So there's no point holding risk any lower. Of course, I'm long on cable. Again, you know, you guys might not be able to see this here, but if I roll back and, you know, I'm looking here at like quite a few weeks, this is as much as a year's worth of price action. So if we look at the week date, we just break that down here, we can see this takes us all the way back to 29th of May 2022, right? So that's the value high. So this is the resistance, right? So again, I'm expecting us, because of the structure, to break a little higher, but I doubt we'll see that till next week. Downside risk, we got higher value perception. Downside risk means any drops to the downside is to buy the dip, right? We're in a bullish structure, right? We could dip a lot further. We do see this with currencies. We overextend their ranges, but I'll be paying attention to the range. And I think value low presents really good resistance, or support, I should say. Dollar yen, I'm already positioned long on this. I'm a little offside, and you can see that from my P&L anyway, that I bought it as it was breaking into this zone, and then sadly it pulled back. But this is still a good trade location. I just wasn't patient, right? I should have been long here, and because this is slightly a negative, well, it correlates with the rest of my position. In other words, I'm hedging myself out. I'm long dollars, I'm short dollars, right? So this is a tricky play, but I'm buying it because I'm expecting that the yen will decorrelate briefly to kind of get out of this position that it's in. Other than that, if I'm wrong, we're going to get dollar weakness, and I'll stop out on this, but it won't be a big deal because I've got some really good positions that are also going to do quite well. And because my risk is managed on this, I'm not worried about stopping out on it. But I don't think we'll get that. I think the dollar yen is also in a bullish structure. It's just not as clear as the rest, right? So even if we dip lower, it's still a buy the dip scenario. I do think we see a stronger dollar versus the yen. Dollar CAD gap in value. Goes without saying, I will not be short this. It is so tempting. When we broke lower in Q period, it was so tempting to be short, and you'd put risk above the highs, but that's the problem. You're going to get stopped out, right? So I'm expecting us to trade the gap. It becomes a sell the rally opportunity. So I'd be short dollars versus the Canadian. I think we're going to do pretty well on that one. So you know, this was a trade that I had last week, well, the week before, but developing last week, where we built up here, trade out of a value high. It was a great short, and then we went through value, and I covered at the value base because it didn't make sense that I was going to stay in across the week, incur some swap cost. It was just not interesting, right? So covered it, and then now we're new week and we're struggling here. Now, I do think we'll rebound, but this is a bearish structure, right? You should even be able to see this on the profile. So I would look for a rally. I'll look to sell the rally, right? I don't think we're going to break up dollar CAD. Bitcoin, it was an awesome bullish play. We traded, we balanced here. So we had open, close, so strong weak bar, trade back in, hit the bid stack. You can see it, right? And then we start to bounce here, right? And immediately I said in my prior video that this is a good long opportunity. I was thinking about it, but I'm a little nervous. I just don't feel it because I like to see bigger drops on Bitcoin. Obviously, we've rebounded. If we sell here and open a new week and start trading upwards, then we're looking at a big structure move, maybe back into 30K. Right, so I'm paying attention to Bitcoin because, again, if we break lower, then just wait. It's definitely a buy the dip opportunity. As far as I'm concerned, the bull market is in the beginning phases. We're already in the making of that. So any strong dips, I think we still need to go higher before we start getting that huge type sell volume. Right, so I'm in that mindset, basically, that Bitcoin, it's a patient one. Wait for it, don't chase it. And even though we have had some downside, for me this still feels like we're chasing, right? So that's my take on this one. And then of course sterling yen, we are still bouncing about. Obviously the volatility at the open, you can see we're down and we're trading a little bit lower, and that's what I'm saying. We've got downside risk, right? There's a gap in value. So there's a lot of downside risk. Either way, I want to see how we react down here, especially coming into next week. But again, I don't like to trade these unless I'm going back into value. So it's almost like a mean reversion. I need to be outside of this messiness that we get after an imbalance. Right? I want to see this drop lower, find a lot of support on the underside, maybe fill the gap, and then I start looking for long positions. So sterling yen for me is not interesting. Same like gold, not interesting yet. They will get interesting, but not yet. Right? I prefer cleaner plays, something that I can really see and I have a high degree of confidence in. All right, guys, I hope you enjoyed the video. Again, subscribe to the channel, hit the like button. Again, if a lot of what we've said has resonated, when there's high volatility on the profile, we tend to get late prints, so you tend to see the bar moving and then we print out a lot later, just because I've got a lot of them running, and MT4 has a lot of problem processing elements in, but it's still as good as gold. In any case, guys, like I said, subscribe, hit the like button. Let's grow the channel where we talk about real trading here, and we talk about how professionals look at it, how it's done, and we start to cure some of these ideas that, you know, you got to trade every day. You know, you can't carry positions overnight, and you know, we know this is not true, right? You can see the alpha on the chart, you can see the big breaks. These are weekly declines. You know, imagine shorting these things and maybe being able to get that macro structure and then stay in these positions all the way down, or, you know, scale in, scale out. You know, it's how the game is done, right? So all of that intraday rubbish, you know, we tend to stay away from. Again, you know, it's not bad to trade intraday, but you know, you have to be aware of the churn on intraday. So you want to execute in a longer time frame, closer to the intraday time frame. So you need to know how to do it. You need to know how to be nimble around it. Well, guys, awesome stuff. Hope you enjoyed the video. To my next video, guys. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?